Hi students, in the last class we started this unit on the corporate accounting. Okay, so the valuation of goodwill, unit number 3. Okay, so in the last class we discussed the, okay, so the valuation of goodwill or the goodwill is depend on the profitability of the business. Okay, if it is the profit is increase of the business, then the goodwill also the increase. If it is decrease the profit, then the goodwill also be the in decrease. Okay, so this valuation of goodwill, its meaning is what mean by goodwill? Goodwill is the reputation of the company, and this is the intangible assets for the business. Okay, so this is the intangible fixed assets for the business. Okay, so this is the meaning of the value goodwill. Okay, so next in the last class we discussed the features of goodwill. Okay, so it is come under the accounting standard 10. It is a fixed intangible assets. Okay, it is a inseparable assets which cannot be sold separately. We cannot sold this separately. Okay, so these are the features of the goodwill. Okay, so next see the need for valuation of a goodwill. Okay, so need for valuation of goodwill, why it's required, and why the valuation of goodwill is required? Because of the sole trading business concern, as well as the partnership concern, as well as the joint stock company. Okay, so why the sole trading is required for the for it means what is the goodwill arises when sole trading business concern wants to sell its business. At the time of the sale of the business, at the time the valuation of goodwill is required, as well as the partnership firm. Partnership firm is what? While admission of the new partners, while death of the or retirement of the partners. Okay, so while amalgamation of the company. Okay, at that time the valuation of goodwill is required in the partnership firm. Next, the joint stock company. Okay, so even it's required when the two or more companies amalgamate or purchase method. Okay, so only or when a company acquires controlling interest, at that time the valuation of goodwill is required in the joint stock company. Okay, so next in the next slide, so these are the factors affecting the value of goodwill. Okay, the location of business premises, nature of business, trade name and reputation, risk factor. Okay, so etc etc, these are the factors affecting in the value of the goodwill. Okay, so next types of the goodwill, there are two types of the goodwill. First one is a purchase goodwill. Okay, so purchase goodwill means what? It is the purchase, it means what is acquired by other business. Okay, so when the enterprise is acquired by the another business enterprises, in that it means what? It is a purchase goodwill. Okay, so the one company is acquired into the another company. Okay, with the goodwill. Okay, so it is making what the purchase the goodwill. Okay, so now how to calculate this goodwill? So purchase price minus the net assets. Okay, purchase price minus the net assets. Okay, so net assets, how to calculate the net assets? The total assets minus the outside liabilities. Okay, total assets minus the outside liabilities. Okay, so next in the next slide, so non-purchased goodwill. So non-purchased goodwill means what? This goodwill arises only when business generates its own goodwill. Okay, so for that purpose we should generate our the own goodwill. Okay, so next in the next slide, just see distinction between purchase consideration and non-purchase consideration. Okay, so what is the difference between the purchase consideration and the non-purchase consideration? Okay, so now see there are the distinctions points which are those arises, as well as the purchase consideration, as well as the purchase transaction cost of goodwill, and the accounting standard 10 and the factors. Okay, so these are the basic points for the distinction for the difference. Okay, so first one is the arises. So it means what's for the purchase consideration. Okay, for the purchase goodwill purpose. Okay, so now see distinction points for the purchase goodwill and the non-purchase goodwill. Okay, so it's one thing it is considered is the purchase consideration. Okay, so it is only the purchase goodwill and the non-purchase goodwill. Okay, so here this the arises point for the purchase goodwill. The goodwill arises when one enterprise's business purchased by another enterprise. Okay, so at that time it is the arises for the purchase of goodwill. Okay, and for the non-purchase goodwill, this goodwill arises when the business itself generates own goodwill. Okay, so arises means what's in the non-purchase goodwill, it is not generated, it is we have to generate that. Okay, we cannot purchase. Okay, so next for the purchase consideration, so purchase consideration for this purchase goodwill, so amount of difference between the purchase consideration and the net assets of the business, we can calculate the purchase consideration in the purchase goodwill. So the amount of difference between the purchase consideration and the net assets of the business, okay, as well as in the non-purchased goodwill. Non-purchased goodwill, it is the it means what's the non-purchased goodwill is internally developed, okay, so it is the internally developed as in the question of purchases, okay, so it is the purchase consideration. Next point is what the purchase transaction. So purchase transaction related is purchase goodwill. So this goodwill is reflected by the purchase transaction of the business, okay, it's reflected by the purchase transaction of the business, okay. And so in the non-purchase goodwill is what, so it is not reflected by the purchase transaction, it is not reflected by the purchase transaction, okay. So next, cost of goodwill. So cost of goodwill means what? Cost of goodwill depends upon the future maintainable profits of the business, okay, it is depend on the maintainable profit of the business. And in the cost of non-purchase goodwill, it is depend upon the subjective judgment, okay, it is depend on the subjective judgment of the valuer, okay. So next, accounting standard. So this purchase goodwill, it is recognized by Indian accounting standard 10, but this non-purchased goodwill is not recognized under the accounting standard 10, okay. So next, factors. So which are those factors are considered in the purchase goodwill? Factors like the reputation of the business, trade name, sound business connection, etc. These are the factors affecting the purchase goodwill. And in the non-purchase goodwill, so which are those location of a business, high quality products, as well as the public image, etc. These are the factors affecting the non-purchase goodwill, okay. So this is the difference. So these differences will come for your exam for the 5 marks as a theory, okay. It is very important question, okay. So next, in the next, let's see, this is the methods of valuation of a goodwill, okay. So methods of valuation of goodwill, okay. So now see, there are actually two main methods are there, okay. There are two main methods are there for the valuation of goodwill. The first one is what? Valuation assets on net asset approach, and the second one is what? Valuation based on profitability approach, okay. Second one is what? The valuation based on profitability approach, okay. So now see, first one, valuation based on net asset approach, okay. So this net asset approach, it means what? So it is the amount difference between the purchase consideration and the value of the net assets, okay. So the valuation of based on net approach means what? The amount difference between the purchase consideration and the value of the net assets, okay. So this is nothing but the valuation based on net assets, and how to calculate or how to evaluate the goodwill in this method. So goodwill is equal to purchase price minus the value of net assets, okay. So goodwill is equal to purchase price minus the value of net assets, okay. So like this, you have to calculate the goodwill under this valuation based on net asset approach, okay. So next method is very important, which is the valuation based on profitability approach, okay. Valuation based on profitability approach. So in this, again, there are three main methods are there. So which are those three methods under this second? So first one is the average profit method, second one is a capitalization of average profit method, and third one is also super profit method, okay. So these are the three main methods are there under this profitability approach, okay. So first one is what's the average profit method, okay. So under this average profit method, there are two methods again. So which are the simple average profit method and the weighted average profit method, okay. So these are the includes under the average profit method, okay. So in this capitalization average profit method, there is no any included, okay. So but in the third, the super profit method, under this there are four again methods are there. So which are those purchase of super profit method, sliding scale valuation of super profit method, and the annuity method of super profits, and the capitalization of super profit method, okay. So these are the super profit method, okay. So now see, this is the valuation based on profitability approach, and this first one is the average profit method, under this simple average profit method and the weighted average profit method, okay. So now see, we will see simple average profit method, okay. So now see, this is the simple average profit method. Under this method, previous year profit and number of years is taken into consideration for calculation of average profit, okay. So for how to calculate the simple average profit, so previous year's profit and number of years are taken into consideration for calculation calculation of average profit. Okay, so now under these methods, how to calculate the goodwill. Okay, so now how to calculate the goodwill, or the value of goodwill is equal to simple average profit. What? Simple average profit into number of years purchase. Okay, number of years purchase. Okay, so the now for this ascertainment of the goodwill, we should know simple average profit. And how to calculate this simple average profit? Simple average profit is equal to total profits of given year. Okay, total profits for a given year divided by number of years. Okay, divided by number of years. Okay, so they will give the year wise profit. So this year wise profit, you have to make the plus and divide by number of years. Okay, so you will get the simple average profit, and this whatever you will get, just we have to put here simple average profit as a simple average profit into number of years purchase. Okay, we will mention in the problem also number of years purchase. Okay, so like this we have to solve the problem on the simple average profit method. Okay, so remaining part or the remaining methods, which is the weighted average profit method, capitalization average profit method, or the purchase of super profit method. Okay, so see sliding scale valuation of super profit method, annuity method of super profit, capitalization of super profit methods. Okay, so we will discuss in the next class. Okay, so if you have any doubt with this, it's you can ask, and this for your exam oriented, it's very important chapter for in this corporate accounting 1. Okay, so just we have to concentrate on this. There are so many formulas are there in this topic, so you should concentrate on this topic. Okay, so it's very important. Okay, so I hope you will be the understand. Okay, so thank you.